All right, so I'm 22 years old. I made millions of dollars trading stocks. No, I don't day trade. I don't use a funded account. I started with only a couple grand. I've been doing this for over 6 years. So in this video, I'm going to tell you exactly what it is that I do, show you how to do it, and it's all completely free. I'm not asking for anything from you. If you want to save this video, be my guest, but that's it. All right, so if I'm not a day trader, then what am I? I am a swing trader. So this one right here. Now, the difference between day trading and swing trading is day trading is much more fast-paced. It's much more active, so you have to spend more time looking at the charts. Requires more money to start, which a lot of people don't know that. And then people try to use the funded account, which those literally don't fucking work. I don't know what you guys are talking about. They don't work. And then it's also tick by tick, which means like a lower time frame. Swing trading is much more slower pace, so you got to be really patient. And I'm telling you, you do have to be very patient. But that's just how investing works. Investing is a marathon. It's not a sprint. You don't get rich overnight. I think everyone knows that by now. It's less active, so you don't have to stare at the screens all day. I really only look at the screens for like 30 minutes a day, if that. Requires less money to start, and you're focused on the bigger picture. So what does all that mean? Well, let's take a look at a couple stocks. So we're going to use DXYZ for our first example, and I'll show you a couple examples throughout this video, but this is going to be, very, very basic. So when I look at a chart, basically what I'm looking for is I'm on the daily chart here. The only indicators that I have is the 10, 20, 50, and 200 simple moving average, and then I have volume down here with the 22 EMA to give me an average over the last 30 days. And what I'm looking for on the daily chart is I want to see a big move up. So we can see the stock makes a 350% move up in about 6 days. Now, this is a very extreme example. It's not always going to be like this. We want to see typically 30% or higher of a move up. So the stock starts uptrending, right? And then we want to see if the stock pulls back to the moving averages. This could be the 10 and or the 20. Most of the times it's just going to be the 10. We can see it pulls back to the 10 right here, which is this pink line, and then it bounces off the 10. Now, what happens from here? It starts to pull back to the 10 again, and you can see it holds the 10 simple moving average for quite some time. If I were to put some lines on this, you can see basically what's happening here is the stock is tightening up. So it's creating higher lows and lower highs. The stock is coming to a pinch. As the stock is going sideways, building this range, coming to a pinch, whatever you want to call it, you should also see that the volume is slowly but surely dying out. So you can see the volume, gets really, really low over here. Another thing, as these volume candles get really, really low over here, we have some very thin candles. So it's matching. Everything is good, right? The stock is going sideways, consolidating, tightening up. The volume is contracting. We get some thin candles. Thin candles are usually a good indication that the stock is about to break out. And then we can see if the stock breaks out on this day. So it is clearly breaking through this range. It is like expanding. This can be called expansion day, breakout day, whatever you want to call it. I call it breakout day. So we're going to buy this very early in the day, which makes sure that we get a very tight stop loss. So let's say we get a stop loss that is 1% wide. So let's say this stock we're entering at $100 and the stop loss is at $99. If we put 100% of our account into this position, we would only lose 1% of our account.